Hey guys, be sure everything on this channel is for educational purposes only, is not intended as financial advice. So a lot of people asked me, what should I read? What can I read to become a better trader? So I wrote something for you. I've been holding on to this for a few months now. It's pretty long. Check it out. Let me know what you think. I'll leave a link in the description below. My trading tips and tricks. Along with some other stuff that I put out a Bitcoin article the other day before the drop, and the key chart, I think you should read the article because it's informative, but the key chart that I think everyone needs to pay attention to is this cyclical thing. So I had to redo this chart basically because the chart file got corrupted on the trading platform, but you can see that every quarter has been a top or a bottom. These values aren't necessarily arbitrary anymore because they are quarterly expiration dates, whether it be OKCoin, whether it be CME, whatever. It's going to be around this time, roughly. CMEs is today, 118. I don't know what it's going to be going forward, but probably 318. Point is, there's a definite cyclical nature to all of this that everyone should be paying attention to. So you can see we had downtrend, consolidation, uptrend. Every single time it's been bottom, top, bottom, top. You know, it maybe isn't the exact bottom, as wasn't the case in these two instances, or this instance, but it was certainly the bottom for the quarter. You know, it didn't go any lower beyond that. So that brings us to March 31st as a re-entry, really. So, you know, you can stay out of everything until then. You know, who knows what this is going to do. We'll talk about that further with some charts, but I think 331 is going to be a nice low, or near relative low, and then July 1st, so the next time point, is going to be the relative top. You know, you can see even this top wasn't exactly on January 1st. It was a little before here, exact here, a little before, a little before, a little before, a little before, a little before. So it's not always exactly, but it's pretty close. Close enough to pay attention to, definitely. Let's go to the parabola. My opinion, dead, which I'm glad. I hate drawing the thing. It's way too subjective. If there was some like point by point thing that I could, you know, paint by numbers, so I could just do here, 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 and then it like draws the rest of it. I haven't figured out a way to do that, but this is what I get when I draw it, and I think it's dead for the most part, which doesn't really concern me at all. Let's look at some pitchforks. So this was the pitchfork with the March anchor. You can see we've pretty much closed outside of that. I'm not calling it dead for sure at this point, but it doesn't look great for being valid. You know, this already is an extension beyond the trend, and you can certainly extend it further. I haven't found success in that, but this comes out to be 1.75, I think, is the point. Here's the other triangle from beginning of 2017 anchor. You can see we hit the median line, and you can see all this based on this trend was just overextended. You know, I saw this, a lot of people saw this, didn't necessarily think that it would pull back this hard at the time. Considering it was still in this pitchfork, it was at the median line, it looked pretty good. It hadn't yet explored the upper half of this pitchfork. It also hasn't explored the bottom half of this pitchfork. So that can certainly happen, and that's, we're talking like 8,500-ish, which is around about the 200 EMA on the daily. Not impossible, don't think it'll happen, but just based on trend analysis, that's where it puts us. Looking at the daily, so there was a flag and a edge-to-edge trade, battling it out, duking it out, if you will. Bears won this round. You can't see it here, but there was an edge-to-edge starting that I took action on. Basically, it's a few hours into the day, probably less than halfway through the day when it closed. It didn't close, but it entered the cloud. I was convinced at that point. It had closed below the triangle, and I knew where it was headed based on the cloud. Just bare minimum, it was headed to that edge. And with the 4-hour EMA theory, that was another indicator that it was going lower. So this is dead at the moment, but remains in play as a target should it recover. And what would recovery look like on the daily? You can see we've got a dragonfly already. If this was green, that would be better. This candle right here. We certainly can get an Adam-Eve situation, where you get a V and a U. You can see it better on lower time frames. Probably going to get something pulling up to the Kijun eventually. This is probably a week out or more. You know, the Kijun will come down a little bit in the cloud. Price will start to pull up. There'll be a potential edge-to-edge trade going up this time. This is all in the future, but definitely something you can easily anticipate and predict. Again, mean reversion, Kijun is mean reversion. So that happens on both sides of the coin. Whether it's up here, it's going to come back over and over again. And it's below, it's going to come back over and over again. Nothing is bearish specifically for the cloud, like all around. Yes, it's below the cloud. Yes, the bearish TK. You're waiting on the bearish cloud. Higher time frames, the weekly says we're okay for the moment. And that's kind of going to be my gold standard for panic. If we start closing below the Kijun on that, I'll show you what that looks like. Here's daily singled. And I've been playing around with this, didn't talk about it too much beforehand, but you can see the entry's pretty clean on the cloud signals. So bullish TK cross, price above cloud. Cloud was never bearish this whole time. You don't get a clean Kijun bounce, but what you do get is an exit here. This was pre-2018, so it gets you out of this bull trap basically, and expecting a head and shoulders, which kind of broke down, didn't go anywhere. Currently everything is bearish on this. Price is below cloud. Cloud is bearish. Fresh bear here, and fresh pile of bear. Lagging span isn't below cloud yet. That's the last thing to turn. That's the fourth signal. So it's price position relative to cloud, cloud itself, TK cross, and lagging span position relative to cloud and price. So this does not look bullish at all at this point. Not really worth shorting it here in my opinion, based on a few other things. Here is what the single looked like, just zoomed out. Looks like zoomed out a little bit. You can see we've had bearish clouds in the past here. It hasn't really pulled far below the cloud when it has, so kind of an interesting situation at the moment. So here's the weekly singled cloud, 1030, 6030, which is worth looking at because weekly doubled is a lot of time, and you may get better signals on weekly singled, just more relevant and actionable based on the current state of things. The doubled might be a little lagging. So what am I seeing here? I'm seeing a few things. The Kijun bounce previously, where we wicked way below, we took 189 days to break that. 189 days brings us to June 16th or something, which follows the cyclical nature of this quarterly thing, which says July is going to be the next all-time high, basically. So that's one thing. The other thing, there was a cross-recross here. So bearish TK, bullish TK. This is the entry of a lifetime here down at 500 on the singled weekly. You know, if you weren't in here, if you weren't in on this edge to edge already, this cross recross and this Kijun bounce, I mean, what else are you waiting for? That's continuation all day. And then you're getting Kijun bounces every single time there's a pullback, which is what you want to see. Tells me my signals are good for what I'm trying to look at. So I don't think we're going to bounce right back up immediately, just based on this, based on the cyclical nature of things. The doubled, you're also getting Kijun bounces. We haven't had a wick this low, kind of nerve-wracking, because there's a lot of space down here where there's essentially no cloud support, meaning no Tenkan, no Kijun, no cloud. A lot of things can happen. Just craziness. I don't think it'll go to 3K, 4K, what these crazy calls are calling for, but the weekly cloud, you know, it currently supports at like 2K. So I don't think we get there. It's just harder to predict once we bust through these signals. Even on the singled, it's pretty close. You can see it's flirted with breaking that in the past and hasn't, so I'm not too concerned, just where we're sitting at the moment. Looking at 4 hour, everything's definitely bearish. You can see cloud wanted you to get out. Here's the bearish entry for Kumo breakout, and then a bearish Kijun bounce, bearish cloud bounce over and over again. So there's definitely early signs. I wasn't paying too much attention to this. I definitely saw it, but when the prices this are rangy, it's really hard to take the cloud seriously because, you know, it was bearish here and didn't go anywhere. So it is what it is. But the daily was definitely the best indicator that I used for actionability. Right now, again, Adam Eve situation forming, at least on the 4 hour lower time frames. There's inverted head and shoulders in here. You can see it hit a previous just zone of stuff, order block, as some people call it. It wicked down there pretty evenly. So nothing too crazy. I mean, this doesn't even look that bad on log. Like, yeah, it's down 50% from the high, but on log it just looks like another day in Bitcoin to me. Here's that 4-hour thing I was talking about. So the theory was that anytime we get across, whether it's lagging or leading, on these 5200 on the 4-hour, we're always going to hit the 850 on the same time frame. So why the 850? I just picked a random guess and checked value that made sense. You know, a round number. 850 hit all of these pretty nicely. You can see it's flirted with 850 before, so this was a double bottom. I think a Bollinger Band double bottom as well. A nice W here. This may or may not have been a div. I can't remember. But we can certainly get the same thing here where it attempts a lower low on less momentum. I hope we don't see that, but it's certainly possible. So something to watch for and not get panicked about when it happens. But overall, it's bounced where it should have bounced. I'm not too concerned. Again, kind of expected. On the daily, this is the 141 EMA, or just the 140 EMA. And looking at the 200 on the daily, you can see, again, nothing out of the norm here. Bounce, 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 over and over again. So it can go lower and be fine, and bounce, and just chill. This is your gold standard for bull bear. Above the cloud is bull, below, above the cloud. Above the 200 is bull, below the 200 is bear. That's just snapshot, zero thinking, trend situation. You can see when we broke cleanly, we started a bull. If we break cleanly, we'll probably start a bear. It is what it is. I'm not concerned at the moment. It doesn't look like that's going to happen. And here's the low time frames, again, 30 minute here on Bitfinex. The reason I'm looking at Bitfinex just because it has the highest volume currently. So what are you expecting here? A shoulder of some kind, probably around 10.3. I don't know what it is now. 10.5. I wouldn't panic if it goes to 10.3. It might go to 10.2, 10.1, whatever it is. Volume's definitely been decreasing. Says this is probably real. The pattern, that is, in the inverted head and shoulders. We're also getting a giant div forming, so we got lower lows on less momentum. That div's already played out, essentially. We may get some sort of lower low here with another div that leads to the neckline and blah, blah, blah. So this is all tomorrow and the next day, 19th, 20th, something like that. But the measured move somewhere between 12.8 and 13.8. So kind of right back to where we were at 14K-ish. We'll see if that happens. I don't know. Let me know what you guys think. Like, dislike, comment, share, subscribe, and happy trading.